If you don't know why these lines are important for the entire week of Monday, October 31st through the first week of November, then you need to watch this video. I made a video update for my Discord community and YouTube Cryptillion tiers on Sunday when price was right here, explaining a couple of things. A, why these lines were so important. B, that it was extremely probable, even with this uptrend, that these lines will be hit, or at least one of them. And then number 3, or C, I showed the 3 main ways historically in this specific setup of price on the daily candles, although these are 15 minutes, explained the 3 ways that price will interact with these lines once it does, with the extremely high probability that price will indeed interact with these this week. So since then, here's what has happened. Boom. Fake out to the upside, 8:30 at about 8 a.m. on Monday morning, and that's it. So let's zoom into this guy. I'll make myself small here in just a second, but check this out. So not only has it interacted with, I guess, the top line almost precisely, go down to the 3-minute chart, check this out. So you can see that this line is real, right? And in specific regards to other people with money-making decisions, or buying and selling decisions, they are looking at that line, or their algos or bots are. So this video, let's take a look on the significance of these lines, why they're important, right? Where am I getting these lines? Am I pulling out of my butt or what, right? And then I'll show you in general the 3 ways price will move with it this week. And then also I will show you some suggestions on how FOMC will break rules with it, and where FOMC might spike up and down, because it's going to get bidirectional volatility, right? And then land it in the middle on Wednesday, November 2nd. So let's go get this Bitcoin. Yeah, so my last Sunday video, it was pretty spot on, mentioning the reasons why Bitcoin will very likely be up, even though during the time I recorded it, it was a red week. I said, no, this is going to bounce up and hit about 21K, and that is what happened. So let's see if my Sunday video update for my community this time is as good, but I'll give you the gist of what it is here. So the entire setup of why this is important, I must go to the daily chart, and I don't have any EMAs, nothing like that set up, right? All right, in that video, I back tested over the last, it was roughly 2.25 years, a situation like this where there was one daily higher high taken out, or just a daily high was taken out, and then price consolidated in a daily fashion similar to this for at least 4 candles, right? Because at the time here, it was the, 1, 2, 3, it was the 4th candle. Under those scenarios, the most important lines that essentially develop because of that are the, if you look on the left-hand side of the structure, are candle bodies and a candle wick. And you can typically dive down into which wick will be more important. So one that already tested low for a fake out, that's not going to be it. The next time price goes below this wick, because you already had it do it once in a fake out, right? And it zoomed right back up. That's when Bitcoin hit like 20K on the nose, boom, and then like in a 1-minute candle went back up. So the next time it goes below here, it greatly increases the chance of this move is done. The rally's over and it's coming down. That was it, right? It's not a confirmation necessarily of a reversal. Rather, it's essentially a threshold. It's a threshold of when the probabilities of one thing happening instead of another, it's when the probabilities just go, like they just go highly in favor towards a downside move, with some exceptions, right? That's what we're going to go over. That's the gist of what this is and where the bottom line comes from. Top line from the candle bodies. So going back in that video, I think there were 6 examples in the last 2.25 years. And in those 6 examples, there were 3 major ways that price interacted with this. So let's go take a look at that on the micro time frames now that we know what we're looking at. So we're looking at for example, a leaf or a bug. So consider this a leaf or a bug. And now we're going to take a microscope and zoom in on the bug's wing to see cells, or the leaf, to see the cells of the leaf. Okay, that's what we're going to do now that we understand what we're looking at. We are looking at a bug, right? Instead of zooming in on the micro time frames, like, what am I looking at? Oh, these are the cells of a wing. No, you need to know it's a wing first. Okay, so now we're going to zoom into this bad boy. In general, the three major ways that price interacts with this is, first off, it hits it a second time. So it can, every single case, it hit it, which is why I told my community, this is almost definitely going to be it. Not definite, nothing's definite. Something different can happen. But if you're long, just a heads up, this has an extreme, because I remember I made the video way up here when price was, how much higher? When price was 2% higher, right? So I let them know, hey, we're getting ready to see it pulled down to here. If you're long, just a heads up. That's what's happened. But in three general ways, this is going to be very obvious, but just wait. For new folks, what I'm about to say, it could go up, could go down, could go sideways. Obvious, but it's what you're going to see as it does it that is going to allow you to switch or understand, hey, the probabilities of this happening instead of this. If I see what I'm about to show you, then I know, hey, this big arrow is way more likely now. Does that make sense? All right. And then also for new viewers, since I'm breaking this down to a very simplistic degree, going from midterm price daily candle structure to micro time frame, this is the moment to go ahead and smash the like button, hit subscribe, make sure you hit the bell for all alerts, because I'm going to keep you in the know in a way that is simplistic to understand, and it'll help you have a much better crypto journey. And then also links to my Discord community are in the description section of all my videos. I'm Cosasverdes with the number 2 on Twitter. And then the YouTube tiers, you can check that out by hitting the join button right next to the subscribe button, and a 90-second video will pop up describing what the hell that's all about and how it's different than Discord. All right, could go up, could go down, could go sideways. That, it seems like a bunch of stupid stuff to say, especially to new folks. Folks that understand more about how price moves knows that that's actually always the case, right? That literally is always true. It could go up, it could go down, it could go sideways. So I'm going to try to identify when you are going to be able to put your bets on this one. Okay, so an extremely high probability play is if price can get back over this point here, which is what this fake out took out. It took out that high right there on purpose to get people out. All right, to get people out of their stops, because that's where people shorting this, recent shorters were on lower leverage, were hiding their stops above this obvious wick, and it booted them out and or liquidated them. So if you were to put like some liquidation heat map, it was right here, mostly because people, people's shorts and all that stuff, and people's recent shorts and on high leverage, their liquidation point was somewhere around here. Plus, in addition to that, the liquidity was bigger here because of lower leverage people putting their stops there. Makes sense? And it went up there, and this was a liquidity grab. So there are a bunch of orders up there specific to high leverage short liquidations and the stops, which are orders themselves, right? Those are actually orders. They create a lot of area so the bigger players can run up price into there and place shorts in the opposite direction to those orders or down, and then bring it down and make instant money, right? Even though price hasn't done anything since. Okay, so the moment that this is taken out again is the moment that this becomes exceptionally probable, and you can almost forget about these two options. Not before then, because of this fake out. So you would have to sacrifice to, so there is a fine balance. There's a fine balance between getting the entire move and increasing your probabilities that you're right. Right? I don't want to say inversely correlated necessarily, but you can't get the very beginning or bottom of a move for a long position or the top of a short position. You can't get the extreme and also have a safety net there, right? You sacrifice safety or probabilities on your side. So it doesn't mean you have to wait for a breakout of this. This price simply going above this area simply means that instantly right there, the probabilities are extremely high, right? Does that make sense? And there are moments before then, depending on structure. For example, if you get really good 1 hour closures or a 1 hour uptrend before that's taken out, sure, the probabilities of the up arrow, right, are likely over 50% more so than these and these, but it doesn't become extremely obvious until that's taken out again, right? And you'll have plenty of wiggle room because this move could easily go up to 23 and change, as my previous videos have been saying for about the last 15 days or so. All right, and that's because there's an origin line up there. Okay, the sideways movement. The sideways movement would be in form of, so that's the up movement. All right, now let's cover the other two. Oh, one last thing. This point, with exception of Wednesday, if price flies up there from down lower, anywhere down lower, and passes this on Wednesday, that does not apply. It doesn't mean this up arrow. It doesn't mean continuation is highly probable in the up direction. Outside of Wednesday, November 2nd. So all of this shit that I'm saying is outside of Wednesday, November 2nd. The rules will be broken, and I'll cover that last. All right, Wednesday, all these rules go out the water because FOMC Bitcoin price will just go like this and back to the middle, or it'll go like this, down, up, back to the middle. And typically from bottom to top, it's usually about 10% range on Bitcoin, which means 5% down and 5% up, which is why I have these two labeled. That is the whale play range. They technically don't have permission, or they don't historically play outside of that range on Bitcoin to create volatility and make money for themselves, right? To whip a price around. Okay, so I guess I'll cover Wednesday next. So we did the up position. It's very obvious, very simple. On Wednesday, you can see that price can easily come up here or come down here or both, which is very possible, right? And this is going to be your middle playground. 5% up, 5% down from the established middle ground. That is why if it comes up here and takes out this high on Wednesday, that means the up arrow for continuation it doesn't count, because usually you go back to closer to the middle of where you started before FOMC volatility happened. Does that make sense? And then you could actually break down, right? Okay. And that happens at 2 p.m. New York time on Wednesday, November 2nd, which is around 5 or 6 p.m. on Wednesday for London and Berlin. All right, it's going to be very, very, very volatile with literally no sense of, you can't really guess which way they're going to take it. All right, so the sideways movement, this might be more notable per Wednesday with FOMC because it could take out longs, take out shorts, go back to the middle, and continue going sideways for a little bit. And it might, if that were to happen, it would likely wait for the weekly's closure. And then the sideways would get continuation the next week. Make sense? That is a very strong option of what might happen this week. It might just get everybody out of positions and go back to where it was and wait till next week to do something. Be prepared for that. Wednesday might be the only volatile day of where you can actually get some volatility in crypto. All right, on Bitcoin at least, and Ethereum most likely. All right, that is one major option. That might be my favorite option this week. I'm not for sure of that, but that is a major contender. The last thing is the down arrow when it becomes probable. Again, what I'm about to show you does not apply to Wednesday. Okay, so far I've covered the up arrow when it becomes probable outside of Wednesday, the sideways arrow, which is most prominent because of Wednesday, the FOMC, and the down arrow outside of Wednesday. It has to do with these lines. So typically on my channel, for new viewers, I give you a price path of how crypto typically breaks down. You usually go under it. You do what I call a punch low, then come back up, maybe do a failure pattern to the top line, then a failure rejection pattern. And then when you take out that punch low, so the punch low is the one, the low that forms on micro time frames as you go below support. And then when you take out that low, that's when price accelerates, right? That is by far the most common way for a breakdown or a breakout if you just inverse this, okay? By far. I mean, I wouldn't say exactly 50% of the time because there are more than two ways price moves around obvious horizontals, but this is among the most common ways. All right. especially particular to the punch low, coming back to retest the previous support, which was flipped to resistance, and then it accelerates after it takes that out specifically. When I backtested this, specific to the 4 or 5 day daily range with daily candle and wick making these two important lines, this didn't really happen. If it went down, it usually just fell off, and it didn't retest it. Like, it didn't happen. Like, I think out of the 3 times it went down, it just went straight down. So heads up there, with this setup, okay, the way I typically explain breakdowns, I don't think it will happen if there is a breakdown. And again, not Wednesday. Price can break down below this on Wednesday and then come right back up and then scream up Friday or next week, right? Because Wednesday doesn't count. On Wednesday, our only mentality is, where's our middle zone, which very likely is going to be around 20,250, somewhere between these lines. And if I have to adjust what the middle playground is, so the middle means 5% up, 5% down, Bitcoin won't go outside of that on FOMC day, but it's likely going to fill out most of that 10% range, right, from the middle point. So if I have to adjust that, I will. And again, I'll let my community know first. But anyway. All right. So if this goes below here on Wednesday, that doesn't count because it'll likely come back to the middle and then decide direction on Thursday or Friday or even next week. Outside of that, if you go below this line again, 20,214, very specifically, okay, this number here, there is, outside of Wednesday, going below that, even for a wick, like a 1 minute candle is going below there, you have your probabilities of downside continuation for this whole week. Like, the direction is down, the week will be red. It instantly becomes the most probable. Even a 1 minute wick going below here. Making sense right now? Outside of Wednesday. And so this line right here and how price is interacting, except for Wednesday, is literally going to give you your direction for the whole week. And very similar to how on my Sunday update that I ended up uploading and made it public. If you want to go look at it, go to my channel, and it's the recent thumbnail. It says daily update. That's what I give to my community and Discord community and Cryptillion YouTube tier. But you can search that one and show how I had a clear-cut, dry plan. It actually worked out great. So I believe that this week is a clear-cut, dry plan too. However, I am, unlike last week, I'm not going to guess the direction on this. I don't think guessing a direction is a good idea this week. I think understanding that this is the main area and waiting until you get that probability flip, like that, like just, it starts flooding probabilities, like good numbers at you. Yes, I'm trading up the whole week. You want to wait for that to happen. And it's probably not going to happen until Thursday or Friday or next week, because all of Tuesday, it's just going to be a setup of which liquidity the whales want to grab on Wednesday afternoon for FOMC. It's like, in volleyball, when a team gets hit over the net to them, they get three hits to get it over the net to score, right? They can do it in 1 or 2, but 3 max. Typically, the second hit is a set for the spike. So the spike, like volleyball, is going to be the volatility play within a 10% range, 5% up, 5% down. Sometimes it's only 4.5, 4.25 each way, whatever. But it's usually about 10% on FOMC and CPI. That is going to be the spike. Tuesday's price action is just going to be because it's going to be the set. Like, if you're setting the ball like this, that's not a very exciting hit. It's not dangerous for the other team necessarily. It's the spike that counts, right? So all Tuesday, if you're kind of wanting to do something besides look at charts, that's a damn good day to do it, because it's literally just going to be an unexciting setup for where the big boys and market makers want price to be, so that from that point they can go grab liquidity in both directions to take it back to the middle before deciding direction Thursday or Friday. So Tuesday, I'm guessing not very much is going to happen. And if something does happen, like one of these conditions, I guess, it's not Wednesday, so it technically would apply, and it would likely get the probabilities correct on the week. So if one of these triggers happens on Tuesday before FOMC, I think that would get the direction for the week right, with a very high probability. But on Wednesday, for example, let's say it breaks down from here, right? And then comes back up on Wednesday here to get rejected. and then on Wednesday at 2 p.m. it goes up here, comes way down here, comes back to the middle, right? I still think the direction for that week, once the market makers figure out which way they're going to take it or decide, I think it would be down if this situation happens on Tuesday. Same thing for upside. If this is taken out to the upside on Tuesday, but then price on Wednesday goes down and up and back to the middle, I still think because the Tuesday up trigger was triggered, the direction for the week should be up. Am I making sense? I really hope that this was very helpful. If you want to see how I very accurately anticipated all of last week's price movement before it ever happened, I predicted a green week to a specific level while the week was still red. If you want to see how I did that, go ahead and check out that video right here. And then if you want to go to my playlist of the most important videos I've ever made in crypto, click this playlist right here. You just got Timified Worldwide. Peace.